Thank you, and Ramadan Mubarak to all Kenyans and the world over. Thank you very much, Abi. Thank you. And it's always nice to talk to you.
Well, we now want to dive into the markets and take a look at what are the numbers looking like. I'll be speaking to Samuel Gichohi from NCBA Bank.
So, Gichohi, let's talk about how the markets have been performing since Corona struck for the Kenyan market and, of course, the global market. What sort of trends are you seeing?
Well, it's been a very interesting time. I think if there was a roller coaster in markets, this was a roller coaster. We began, of course, with a lot of skepticism at the beginning, wondering what was going to happen when we got the first coronavirus case announced in the country. However, by the time that happened, the market had already sort of factored that in, since foreign investors who take up more than 70% of our market had already exited en masse, and that had caused the market to slump by over 20%. That said, during the same period, we have seen a very strong uptick by our local high net worth clients, and that is very interesting because it clearly indicates that our investors in our market, being more sophisticated, and especially the high net clients, have seen an opportunity to buy into the market. So we did see quite a bit of activity on both sides, with foreigners mainly on the sell side, which drove the slump. And then we saw a stagnation. I think when the likes of KCB reached around 34 and equity around 33.50, 33.80, we saw them sort of stagnate. And then now the announcements kicked in. And then, of course, the announcement period with dividends, equity increasing theirs to 2 shillings and 50 cents. KCB also did 2 shillings and 50 cents. We saw others, but mainly KCB, equity, and Safaricom have been the focus. So we've seen quite a bit of activity. There's not that much in terms of volumes, but we have seen buy and sell activity, which is creating quite a bit of volatility. And in a market, volatility is your friend.
All right. And Gichohi, I just want to pick your mind. When you talk about the volatility that we have experienced, what do you have to say in terms of what does the future hold for the market? That is the one question every buyer is asking, every seller is asking.
Well, at the end of the day, I will still go back to the fact that foreign investors take up over 70% of our market. They sold, and that was the cause of most of the exits. So the issue now is when, not if, the markets will start to regain post-coronavirus. And this is really a function of when will the foreign investors start to come back to our market. We've also seen a bit of local QIIs, the qualified institutional investors, also coming back to the market in the last 1 or 2 weeks, and we saw them sort of concentrate on where the books closure, for example, in KCB were, and they picked up quite a bit of that and pushed the prices. So that said, again, the economies will suffer. People will now have less disposable income. So it could be a long-drawn stagnation once this whole volatility thing is over, if people don't have enough money to enough disposable income to invest in the stock market and the securities markets. And of course, unlike other situations, we haven't seen that much of a flight to safety. We're usually in a situation where stocks are slumping, then people will move their money to fixed income, which is bonds and T-bills, and also into fixed deposits. We have seen quite a bit of local investor activity on the buy side, which is very good for our market. It just means that in as much as it is not sustainable if the foreigners keep selling incessantly, it is a good time to buy. It is a time when investors are seeing the opportunity at these low prices. KCB equity were at 55 somewhere in January. Safaricom was at 33.50, which was their highs, and now you're buying them at deep discounts. And this, as long as their fundamentals remain stable, Of course, we are yet to see how much banks' balance sheets will suffer based on maybe they're going to have more defaults and maybe more issues with maintaining their loans and restructuring the loans. We will see how that pans out, and once we see the sort of results we are going to get around July for the half year, and of course the first quarter results, we are going to start to see exactly what to expect in terms of valuations.
All right, thank you so much, Samuel Gichohi from NCBA. And with that, we want to wrap up the show on this day, and we do thank you for your valid feedback. And remember, you can always engage with us on our social media handles appearing at the bottom end of the screen. And on behalf of the entire team, for us, we say adios. See you next time. Keep safe. And of course, remember to ensure you are always within the WHO guidelines.